Hey traders, this is Christian from Ritz Tribeca Trade Group with your weekend video. So we're going to go over a couple things here in the weekend video. I usually start with kind of a broad picture, which I'll spend a few minutes on. I'll talk about the major indices, what's kind of going on right now in terms of ETF flows. I'll also, which I have them up right in front of you. I'll touch upon them, talk about a couple things that I'm noticing there. Sometimes we can find some interesting little ETFs that we're seeing a lot of money go into. Also at China, why I also look at ETF fund flows, it also kind of gives a good sense of sentiment, whether or not this market is really getting bought up, if all the parties are in already, if it's a capitulation in terms of either selling or buying. So I'll start there, and then I'm going to talk a little bit about the technicals. So the first thing that kind of stands out to me, which is always in the first paragraph that I write about in the weekend newsletter, is that there was not a lot of buying last week overall. Now, there was in certain groups, which I'm going to talk about in sector flows, but in terms of the overall money going into the U.S. market, it was about $500 million, which that's not a lot. I think on average we see a couple $1 billion go in every week to ETFs. Some of that comes right over directly from mutual funds, but basically it wasn't really a lot of money that was being added there. And as we've been seeing all year long, a decent amount of inflows going into international ETFs. Emerging markets and developed markets have been seeing kind of a tug of war every week. The last 2 weeks, it's been developed markets that have seen some good inflows. So VEA is one ETF in there, and they also have been kind of flip flopping VEA versus IEFA. They actually saw between the two of them, they saw the third and the fourth highest weekly inflow of any ETF last week. So that's $1.8 billion almost between the two of those two funds. So pretty decent amount. That's kind of what probably is most notable to me in international ETFs. Also, emerging markets had inflows, but you could see a pretty big drop off from the difference between emerging versus developed. Japan saw a little bit of inflows. Spain, the Spanish ETF EWP actually saw decent outflow. I think a lot of that, if investors are just kind of in a particular area, again, this is my take. I don't know why they got out of this ETF, but with the tensions kind of heating up last week in Spain, you could see some investors kind of run for the exits. And my take is just that sometimes there's investors in there, and then when things kind of don't go as expected, such as what's kind of going on there right now, they pull the money from there. So you could see these big red bars. That's outflows, and you could see the volume. So that's what last week's volume was people taking money out. And again, it could just be people just don't want to be in there at this time until things, which again, I see that a lot in fund flows. Whenever there's something going on that's out of the ordinary, people just pull the money out of that particular area. And I think that's what we saw in Spain last week. So that's notable. In the U.S., there was some. While again, the overall number wasn't really that crazy. There was some interesting things going on. Industrials saw by far and away the biggest inflow, and that's XLI with a $1.4 billion inflow. So a lot of money going into industrials last week, $1.7 billion. Again, much bigger. You can see the whole table here, much bigger than any other ETF. Financials still had 890 million, which is a lot. And I think for this, you really have to take a view at the last 3 weeks. So something I kind of just summarized from my previous newsletters, it's $2.9 billion that have gone into financials. So you're kind of, if you're wondering, I know possibly a lot of you watching this video watch option activity, and we've seen a lot of buying going on in names like Bank of America, Citigroup, but it's also what kind of pushes this up so much is all this money that's being reallocated into financials. So if you're just concentrated on that option flow, sometimes you miss out at the overall picture. It's good to kind of put several pieces of the puzzle together, not just one thing. But I mean, $2.9 billion going into financials in the last 3 weeks is huge. This was, so you could see, if I could bring up, so this was the fund flows from last week, from not last week, but the previous week, and you can see financials were the top sector inflow there. Materials, which was third on the list, doesn't really catch a lot. You know, the $585 million, it's third on the list, but it's very rare for materials to see that much inflows. So I'm going to talk a little bit about those in a second. And they actually saw, if you kind of look at the list, it wasn't just one ETF. That's always like when I see a lot of, I'll call it breadth in terms of ETFs, where it's not just one ETF that just dominates the flow. You had IYM, XLB, Lit, which I'll talk about in a minute, which is the lithium ETF, and also GDXJ saw some inflows, and then things like FXZ and VAW too. So I mean, these are still $50 million a piece. I mean, so pretty broad inflows, I would say, going into that group, and that group is absolutely broken out. On the outflow side, consumer staples, you could see down here is the biggest outflow. A lot of money coming out of that group. That group has really trailed. I think it's right at the 200-day moving average. So a lot of money being taken out, and you could kind of call this a rotation. It wasn't just consumer staples, but utilities and REITs. It says real estate here, but it's really REITs. So what are these three areas that saw the biggest outflows last week? What do they have in common? I think they're very interest rate sensitive equities. They're kind of, I don't know if I would call them interest rate proxies, for I guess interest rate proxies in the equity market. So as rates have continued to climb a little bit the last couple of weeks, there's been a lot of money that's been taken out of these groups and probably just rotated in going into the first couple of sectors that we talked about. But yeah, REITs, utilities, consumer staples, all seeing outflows. Tech was on here as well, seeing a little bit of outflows for the week as well. So that's pretty much it. That's all I want to touch or cover here. Gold, which has had 7 straight weeks of inflows, a little bit of outflows this week. So let me just go over, probably spent a few more minutes than I wanted to, but it is what it is. So where are we right now in the overall market? I think a lot of people are quoting the fear and the greed index. That's become, I've seen, I think just a few people used to track that or posted it. Now you see everybody and their mother is posting that on Twitter, what the fear and greed index is at. And it's a 91. I think I have this up someplace. Let me see. Apologies. Yeah. So one thing to note when you look at this fear and greed index, which you could find by googling it, it's a 92. It's really really hot. So sentiment is running high. And you want to put these things in perspective. Also, take a look at the components. See what these things, people don't, just like with, I find this funny because I think a lot of people just quote this and they don't actually look at the components, which is kind of like an index. A lot of people will quote something and they don't look at the components. Like, for example, one thing that I see done erroneously a lot is people talk about small caps and they talk about energy stocks. And they're not really looking to see what, for example, energy is a very small portion of IWM. It's only like 3%. So if energy stocks go up, it really doesn't push the small cap. So kind of similarly, always look at when you're looking at an index ETF, which this is an index, it's a fear and greed index. Take a look at what the components are. I think that's makes you really find out some of the causes of these things. But things like the put call ratio, things like market volatility. So the VIX is actually a portion of this, which is at very very low levels, and I have my own theory about that. But I just think it's doing. People think that the VIX is not. Are dismissing it. I think the VIX is doing exactly what it should be doing. We're looking at rotations that go on every week inside the S&P, and that's why the overall index is really moving very lightly. It's grinding up, but it's not moving. It doesn't have big days anymore because we're seeing things like, if you go back to ETF fund flows, we're seeing a lot of rotation going on, and you could see it here. You could see where the money's being pulled from and going into. So nevertheless, what is my takeaway from this? Because again, it's another thing that people quote this and they just say, oh wow, it's really high. My view is that the market right now is pretty much priced to perfection. And what that means to me is we could continue grinding higher as long as we don't have any bad news. But if we have the slightest bad news, let's say a big analyst come, it doesn't even have to be a specific market event. It could be anything that will kind of cause a little bit of a blip on the screen right now. Because I think this is telling us that we're at a very high greed area, and anything bad is going to cause us to kind of maybe get hit a little bit. Again, if we don't have any bad news, maybe we can continue to grind up. But let's face it, the markets are overbought here. SPY is at a 74. It doesn't get that high very often. Notice it did stay this way for a while. IWM, which I've been talking about, has been overbought. It's still overbought. I'm actually short some credit call spreads that are basically right here at the money. So I'm looking for a little bit of a pullback in the next couple of weeks. I don't know what it's going to be, but it also makes for me, like, we had a great trading week in the Tribeca Trade Group, in the Tribeca trading room last week. We really, I would say, killed it because the market has been going higher. So we've been staying long. We've basically just been riding the wave up. And the option activity was awesome last week. Really really good signals, and in some areas that haven't been bought out. But I have a couple hedges on now, as I didn't have any hedges at all on for basically the last few months. But as things really have kind of pushed to get overbought, having a couple hedges on really in options. I don't put on any hedges in my cash trend portfolio, which is up very nicely right now and outperforming the S&P, I think, by 3 percentage points year to date. But I don't have any hedges on in that cash portfolio. But in options, I do. I do have a couple things on right now. So I think IWM is very overbought. I think that may be due for a little bit of a pullback. Again, a lot of that has been the financials. The financials are the biggest weight in IWM, and they've really, just as I talked about, have seen just a massive amount of inflows going into. So take a look at that purple line in carry. That is a VPOC, version point of control. Sometimes we'll rise up to these, and then we'll kind of fade away from it a little bit. So we just hit that on Friday. So maybe we see a little bit of a little bit of digestion in the financials there. So I think that's a pretty good tell there that we've risen up and we've hit this. Clearly, we're not as overbought as we were. So maybe we could also possibly just digest a little bit and take that next leg higher. But we do have earnings coming up. So I wanted to talk a little bit about that in today's video as well. You can kind of do a comparison of what we've done in previous quarters. So take for example, Netflix is one of the first one that goes. One of the first, the banks report first. That's not what I want. I want the earnings. So the last earnings period was 7/17. The reason why I'm pointing this out is because I think there's a interesting pattern that happens around earnings season. What did we do last earnings season right when we got into the heart of it? This is a chart of the S&P. We basically just chopped for a month. From right around that 7/17 throughout those heavy weeks of, there's like 3 weeks where the majority of the names report in the S&P. And last quarter, remember what we did? We had a lot of chop. We basically didn't move for a month. And that was very similar to what happened in January. If you go back to January this year, right around earnings season as well. Again, just so I'm not making this stuff up, but January 18th was when Netflix reported earnings, and that was basically where's January 18th? So right around here, right in the middle of this period, it was a big chop fest, and then we took that next leg higher after earnings season. So it kind of seems like what we've done now. So I think it makes sense. I'm not really trying to make a huge prediction here. I'm just kind of observing what we did last earnings season. So keep in mind, we've got a couple weeks yet to go. But I think it could be a reason. Hey, listen, going into earnings season overbought. So it's basically we're going to start with the bank earnings first, and then we'll get to Netflix, which is the 16th. So it's coming up right? So I think that's actually this week, right? What's today? Today's the 7th. So it's not this Monday, it's next Monday is when Netflix. So keep that in mind. Again, things to kind of realize is that we've been on a huge run. We're going to be going into earnings season, which brings me to my next topic, which I want to talk about is names that could possibly run into earnings. So we issued a couple different trade ideas. You have to be a member of the Tribeca Trade Room for names that I think are going to run into earnings. So I'll just share with you one of those ideas. I'm not going to tell you exactly the trade. Again, you have to be a member for that. But I'll tell you why I like Amazon here is because it really hasn't done anything. It's one of those names that hasn't participated for the last quarter at all. So we put this trade on Thursday, and it's already, I think, marking at like a 70% profit. I think Amazon can run into who knows what they're going to do with their earnings report. But basically, this is what they did on earnings. They peaked out at 1,083 and they've done nothing in 3 months. They've had a little bit of back and forth movement where you probably could have scalped here. But the other thing that I notice here from a technical aspect is a new MACD crossover. So we put that trade on in the trading room on Thursday, and on the first bar of the MACD crossover over. So we have a trade that is designed to outperform or looking for a run into earnings. We did one in Google as well, and I have one in ATVI as well on that we put on last week. So again, I'm not going to go into the details of that. We've got a lot of trade ideas like that for names that could possibly haven't participated that much. They're not overbought. But I think that they could possibly run into earnings. So go ahead, check us out, tribecatradegroup.com. By the way, if you want to if you want to check us out for a couple days, it's not something that I tend to advertise because I really I want serious traders in the room. And when I advertise something for free for like an open house for 5 days, it is what it is. I get a bunch of idiots that come in and people who aren't really serious. So if you are interested in getting a free trial to Tribeca Trade Group, Tribeca Trade Group, you could email me. My email address, which I'll give you, is cfromhertz at gmail.com. Last name Fromhertz. And if you're interested, if you're really serious, if you're a serious trader, I only want serious people in the room. I don't want people who are not serious. So go ahead and email me if you're interested, and I will give you a few day pass to see what it's all about. And the majority of people, serious traders who check us out, stay for a long while because what we've got going on is much different than other trading rooms that you may have participated in before. Okay, so let me just get into a couple trade ideas for this week, and then we'll talk about option flow, which was awesome this week. So first, let me just finish up with a newsletter again, which comes included in your subscription. Lit is the first one that I wanted to talk about. Take a look at the volume and the inflows. So this one is a trade that I recently put on back on the 27th. I think I should have that in here. We did that. I did that right on the dip. So this was a ETF that I was watching for a long time. Really wasn't that involved in, but once I started to see this massive volume, I actually got into it on the first the first green bar, which was right here. So I've got a nice gain already, even though it slid a little bit on as ALB is in this ETF, which got downgraded on Friday, which caused a little bit of volatility in the group. Just to kind of show you what's been going on in materials, as I mentioned, a lot of inflows into that group. I think another ETF that I highlighted in this weekend's newsletter is GDX. Why do I have that? I think it's really good diversification for somebody's portfolio. If you've got a lot of equities in your portfolio, again, these things really it depends on how you're positioned. But I think GDX versus the 200-day moving average, which is right here, as long as you're disciplined and use this as your stop, if it doesn't work, this is a very easy setup. And I like the bar on Friday. It took out it bullish engulfing candle, took out these last 2 or 3 days. It's right inside value now, 23.22. So this is a really easy setup after a climb, a dip, and some digestion, holding the 200-day moving average. It doesn't get much easier in terms of a setup, right? Again, we don't know if it's going to hold the 200-day moving average, but I like what I'm seeing there. So I don't think it gets much easier as that as a setup. Again, it just when I say easy, it doesn't mean that it's guaranteed to work. But that you could get out of this if I'm wrong and it goes below 22.93, you can get out with a relatively very small loss. So I have that highlighted in this weekend's newsletter. A couple other things to kind of mention. I've been talking about this for a while now. I mentioned this earlier in the week in the trading room. EEM versus SPY. You kind of have to take a step back and look at emerging markets versus the U.S. markets. I did that with two ETFs here, EEM and SPY. EEM has been in a big downtrend on a 5-year chart. But this year, which I've been talking about all year long, emerging markets are showing some signs of life and really outperforming. So what am I looking at? I'm already positioned long in a bunch of emerging market ETFs. I'm long EEM. I'm long Singapore EWS. I'm long Brazil. That is EWZS. And I'm also looking at India. India dipped up quite a bit a couple weeks back. EPI, which is one of the ETFs, and then you have SCIF, which is small cap India looks like it's reclaiming those moving averages. So again, I look for trades where I can get out to where I have a nice defined level of support where I can get out to if it doesn't work. So just reclaiming the 100-day moving average, I don't have positions on in either one of these ETFs, but I'm looking at entering next week. ILF. This area has been really hot this year, and this has been in a nice uptrend. We'll kind of go back and show you what this looks like here. And we'll look at a 5-year chart. You can see this nice uptrend that this has been in, and it's pretty diversified. It's so if you're in Brazil, which is EWZ, ILF gives you a little bit more exposure to a couple other countries. Now, granted, Brazil is still the biggest holding in this by far. It's 60% of the ETF, but you also get Mexico, Chile, and Peru. I mean, you want to look at some hot areas of the market, which nobody's talking about, which we've been talking about now for months, is Peru and Chile. So take a look at a 1-year chart in these things. These things have just been, call it beast mode. ECH is the Chile ETF, very, very strong. So these are the things that I look at every week, and I watch to see where the money has been going into. And you could see these green bars. That's investment. Looks like there's been some money going in every week for the last couple weeks. Not huge money, but these are small ETFs. But nevertheless, there's money going in there. All right, so there's a couple ideas for you, a couple macro ideas. Single stock, which I usually shoot a video for this, just to kind of review some of the option activity from last week. So let's start with a couple things. We'll go up to about 10 names here. So I'll try to run through these a little bit quick because the video is already 22 minutes long. But GM, this is probably one of the most interesting trades, I would say. Let's see if we could find. I mean, they've just been killing this, going after GM like crazy. And you notice when I look at a long-term chart, 5-year chart, look at how long this thing has been going sideways. So they've just come on. I could show you trade after trade. I've got it here several times from last week. Basically, all you need to know is they've been going after this GM like crazy. I could show you the last 5 days. And I could show you just the top sweeps, which are the most aggressive trades. And you can see they've been doing basically everything. They've been going after the Octobers, they've been going after the weeklies, they've been going after the Januaries. So right so my view on option activity is if someone's going out to January, this is extremely overbought right now. It's a 90 RSI. I think there's more upside for GM, and I think you want to stay with this rip, considering how long the base is. You could basically measure this big long sideways activity from 2013, 2016. This name has not participated at all, and you could go back. We could look at a 10-year chart. It's not participated in the equity rally at all. And it's finally starting to get going. So I think there's more upside. I will not be purchasing it here because it's a 90 RSI. Let this thing kind of come in and burn off some of these overbought levels. But This is how it works with option activity a lot. Is you don't necessarily have to jump on it. I know there's a big fear of missing out when somebody sees calls being bought. Everybody starts to talk about it on Twitter. You could be very patient with some of this activity. ITB is one of those things that we saw call buying earlier in the year, and DHI call buying, and it took a long time for this to really get going. There was actually a decent dip here. They bought calls all through here. And if you look at the January options in ITB, the home construction ETF, they loaded up in options all through the year. But it's just been this last move up here in the last month. So people don't talk about that on Twitter when there's January calls or even further out calls. Sometimes these trades they don't work right away, or sometimes they, in this case, GM is blasted off right away. But I don't really want to buy it on a 90 RSI, so I'll wait for a pullback. And if you're patient, other than for a day trade, if you want to play these for when you see the activity right away and it zooms up, if you're in it for a day trade, great. But for a swing trade, I think this one has to come in a little bit. Gilead was another one. There's a few more interesting ones. So I think Gilead is still interesting, but I want to get to some other ones, which I do have that highlighted. It's kind of been doing. Speaking of patience, it's been doing a little bit of digestion here since this big move up after they bought. Who was it? Kite Farmer was it? But it's just kind of been hanging out here as it hasn't broken down. And notice this is one that they went out to January for. So I took this trade. Full disclosure, I got out of it on Friday because I wanted to trim some of my equity exposure, but it's on my radar. So maybe if I see another call buyer, I will jump back into it. BZUN, this is a hell of a volatile Chinese internet ETF. Sorry, this is let me move back to 1 year chart. This is a name that I actually added in here. Possibly, I'm trying to remember if it was the wrong sheet. That was back on August 31st that I added to this ETF. But I love to see call buying in a name, so I must have added to it right in here. So it's been on a really nice run. It's pulled back to the 50-day moving average. Hey, great setup here again. This is one, there are options in it. What they did was they purchased, I believe, January options. Yeah, January 30 options, so going out long term. But this is a volatile name, and I'm long stock, and you could do that versus you could be long versus I think the 50-day moving average. Again, a nice easy setup. If it fails on the 50-day, personally, I would get out. You don't want to sit and chop and wait to see if it bounces on that 50-day moving average. But a I mean, this name from when I went into it just on the beginning of September or excuse me, the end of August. And basically in just a couple weeks, it went from $28 to 40. So the stock is volatile enough. I don't think you even need to use the options in it. But I know some people like to play the options strictly. Tech Resources. This is another name that they've gone after repeat multiple times. This is a really nice setup as well. Why is it a nice setup? Because it's held that 200-day moving average. So it actually stayed there for a couple weeks. Now it's a little bit above where they bought the calls, but not that much. We're talking $31 or $21 to almost 23. So I like this name. You know that you've got some paper in it. So I think it's a good place to add. Now it's not right on the 200-day moving average, but again, set your stop to the 200-day, and you only have a little bit of risk on your hands. Again, you have to be disciplined with this stuff. Intel is another name that they've gone after repeat times, similar to GM. This has been a name that hasn't done anything for a long time. So we can look at a longer term chart in Intel, INTC. And this one, I think it pays to kind of look at a 5 year chart. So it's not exactly like GM, but kind of the similar. It hasn't participated. I mean, you look at a chart of SMH, which is interesting because Intel is one of the biggest weights in the SMH ETF, and look at what the whole semi group has done And Intel is a major underperformer going back. So yeah, it's up, but it really hasn't done anything here. And look at the size of this base. And I think this one has more upside to it. Again, it's kind of, so again, a name that I think not to enter right here. Again, it's my own personal opinion. With an RSI way overbought 85. But if this thing comes back so what I do is I put an alert. So if this thing comes back and retests either 38.34 or maybe this top of value 37.30, 37.85, that would be your place to get involved in Intel. Again, I mean, look at the RSI; it's way overbought. Could it continue to run? Single names can stay overbought for a while, sure, but I think you want to be strategic on this one if you're not in it yet, and look at that 38 handle for possible entry into it. All right, so that one I think is one definitely to keep on your radar. Cree, this name actually got a downgrade on Friday, but a lot of calls. This one already made some profits. Wow, it actually I saw it down decently. It looks like they bought the dip in it. Something that I had not looked at until now. Uh, yeah, this thing started down on the downgrade. I forget which broker downgraded it, but so this trade was back on Monday. So if you go take a look back, because you always want to look to see when it was bought. I think Monday was in here. So it did make some nice profits here, but it's holding in here. So again, this Cree trade was for November. All right, so that was Monday's option flow. You're gonna see a couple of repeaters in here. Tech is on here again. IGT, just when you think, I just actually tweeted this one out a little while ago. Just when you think when they're done buying calls in this one, I mean, this was a huge winner in the Tribeca trade room. This big leg up here, it pushed through the 200-day moving average. As we saw more and more call buying, there was some upgrades that happened in the space, which took it to a next leg higher. It's not overbought anymore. It's pretty close to a 70 RSI, but it's a 67. If by chance this thing comes in at 23.71, I'll be a buyer. I think anytime we see a little bit of a dip in this name, call buyers come back into it. So another name to keep on your radar, and it's been this way for like I would call them the second tier gaming stocks. SGMS, we'll talk about that one too. But a couple of these names that are not like, when I say second tier, I think first tier is Win, MGM, Las Vegas Sands, and even that MPEL or MLCO. And then I think your second tier is Penn, IGT, and SGMS, and those three have all been super, super hot. Yelp, another name that you have to take a look at a 5-year chart, but they've been purchasing January options in Yelp. So another name that's been on a nice run this year. But again, looking at a 5-year chart, this is just breaking out of this big, longer trend. Let's see what this looks like here with the value areas. Yeah, I mean it's had a real quietly. You don't see too many people talking about this name, but it's now breaking above value. You do have a VPOC up here, but you got another one up here. So you go back to a 1-year chart on Bloomberg. Yeah, I mean it's breaking out. So is it way overbought right now? Let's see. It is a little bit overbought on the weekly chart. Let's see what the RSI is. It's a little bit overbought. We get a so these are things. So the names that I'm pointing out here, some of them that are overbought. If we end up getting some type of a market dip next week, these are the names that I think would be really good to buy on the dips. So it's good to put these names into a watch list in your trading platform. Kind of wait for these names to kind of come in a little bit. APC, this is one energy name I would keep an eye on. We've seen a couple buyers come into this one, a couple of different days. Dunkin' Brands, which we saw some calls on Friday as well, more short dated. Again, I really would like to go over the longer dated positions. The October positions are great for day trading when we see aggressive call buyers, but at this point, I really don't want to hold too many October positions unless they're really, really cheap. Like less than 30 cents. I really don't want to hold too many October positions overnight because the theta decay is huge, is the biggest on positions that expire in a couple weeks. All right, so XBI, we spent a lot of time on this one. This is the biotech ETF, equally weighted. There was a nice note out by Goldman on Friday. Let me see if I can find that, just so you have a frame of reference. What ticker did I see this under? I'll come back to you on that note. But XBI, your biotech has been ripping, right? The last couple weeks, it did a really nice. We've been all over this. After it broke out, it did a month of digestion. So again, this is why I like the longer dated positions, because biotech has been a great performer. But if you were in a short dated XBI position, and September, it basically didn't move, but you could see the real nice performance the last couple of weeks. So someone's looking basically for more upside. You could see that 91.11. If we break out of 91.11, we've got more upside. It's a little bit overbought. I did not put this trade on when we saw it. I actually quickly put on a trade on Friday and then took it off. I'm waiting for a dip. I really am. I think the issue with biotech is when we do get a little bit of volatility, when it does show up, biotech is one of the first things that gets hit traditionally. I'm not saying that's going to happen this time, but there I think you'll have a great opportunity to get into this trade. Again, look at how extended it is from the blue line. This is the yellow line is the 5 period exponential moving average. The blue line is the 20. All right, so I think once the price comes back to the 20, that's your place to buy it. Just to mention what somebody said to me today. Sorry, this week, one of the Tribeca Trade Group subscribers said, having cash right now and taking some profits is really good, because the problem when a dip comes is sometimes you just don't have cash on hand to buy the dip. So I think that's an excellent point to have that cash available right now. Take some profits on some things, because again, the market ebbs and flows. We're gonna get a dip again eventually. I can't tell you if that's going to happen on Monday or Tuesday, but it's going to happen. And you want to have cash available to buy that dip. Every time we see one of these dips like into a moving average has been a great place to buy in this uptrend that we've been in. So that's what I'm looking for at this point. And also names that are not extended. So I talked a little bit about Amazon. I talked a little bit about Google, which Amazon has been seeing more call activity than Google. It's been seeing some real nice aggressive option flow. Not every day, but it's been happening at least once a week the last couple weeks. ADMS. So I'll talk about two biotech names that have been seeing some sharp aggressive flow. This is one of them. I don't really know a lot about this name. This is Adams Pharmaceuticals, but there's been call buyers in there. So it's kind of a sideways looking chart. It's above the 200-day moving average. It's in an uptrend with a pretty flat looking 200-day moving average. It looks like the moving average is starting to curl up. So again, I think very speculative name, but they've been buying December 22s. So they're not going out to short dated positions. So I remembered what name it was that I know had the news story under it. This was the note by Goldman for biotech, by the way. So they like small to mid-sized cap biotech. Funny, right? What's the XBI ETF? That's an equally weighted ETF where the small and the mid-sized companies get the same representation as the large companies. But here were the names that they said that they liked. Should be in here someplace. Yeah, they've got about 6 names. So a great way to kind of play this theme, if you don't want to buy all these names, is just to buy the XBI ETF. I think on a pullback. EMR. This is I really liked this trade. I liked how they were going after. So I'm in this trade. It's got to break 64.05 for a breakout. It looks like it's been hanging out. So again, having patience with this one. It's a December trade. So it's not an October. If it was an October trade that I was in, I'd be like, oh yeah, this thing's not working. But I'm in a December trade, so we have time to sit in this one and just kind of let it do what it's doing. If it breaks any support, major support, then I would say get out. But it's not breaking any support. It's just hanging around, and I'm watching 64.05. So why do I like this trade in EMR? Because the way that they bought them, they bought a lot of little contracts aggressively. Everything was bought pretty aggressively. And if we look at the top sweeps, you could see 500 contracts. So this is a pretty decent sized trade when you add up the the premium. It's a couple $1 million trade, but you could see all these little prints. That's puts. Sorry, calls, calls, calls. Same strike, 62 and a half. So someone looks like they're being sneaky. Now I don't know if anything's going on in that name, but it looks like somebody was being sneaky. UPS I have in here a couple times. Once before the news came out about Amazon possibly getting into the delivery service, and then afterwards they bought the dip in UPS. PayPal. So here's the other one. These were the November 120s that they bought. You know, it's rare to get a nice dip in UPS and FedEx. Well, you got one. Um, I'm not in either one of these positions right now, but I'm watching. Again, you can't be in every single position. So some of the names that I'm going over, I like a lot, but there's no way that you could be in every one of these positions. You kind of have to pick and choose which setup you like. Intrexion, a name that we really haven't heard a lot about. It's underneath the 200-day moving average, so it is in a downtrend. It kind of got squashed on Friday, down 6%. I don't know what the news was, but I've seen a call buyer come in several times now, November 22nd. And I think on Friday, when I get to Friday's flow, you're going to see the name come up again. SGMS, like I just mentioned, they keep on going after SGMS. From a technical aspect, maybe wait for a pullback. Again, it's very, very overbought. 87. Maybe if this thing comes into some support, maybe 45.55 might be enough. That's what I would be watching for in SGMS if you're not in that trade at all. CHRW, nice trade as well. Here I'm going to spend a couple minutes. CAVM. This is a really interesting looking chart. What is CAVM? Some of these names you may or may not be familiar with. This is another semiconductor name, and one that really hasn't participated. So, I'm not an expert on semiconductors and everything that they do, but this is the description of it. And this is another repeater. My colleague Pat Harris had this on his newsletter a couple weeks ago. This name. So Cavium right above the 200-day moving average and a nice easy setup. Again, you could also use the top of value here. So 66.45 is your support where you know it's not going to work. So they went after this one. I think it was what day am I on here? Thursday. Wednesday. I think Wednesday was the. Oh no, this was Thursday. So they bought these. I tagged along with this. I bought these as well. These December 70s. I think my purchase price was right around 347, and then they came in again on Friday, which I love when you're in a position and somebody comes and buys more. How do I know these were definitely bought? Because I could see the value of my contract because I'm in the same one, and all of a sudden my contracts went from the price went from $4 to 430, so which is what they bought them for. So it's a definite buy. I could tell you that there's not a lot of certain things I could say 100%, but looking at the price of my options in the December 70s go from $4 to 430, they were bought. All right, so real nice trade, real nice setup, and in a name again that I think at this point you have to look for names or I think it's wise to look for names that are not overbought. This is not overbought, and you can kind of see where it is. All right, so next, PayPal. How could I not talk about PayPal yet? My goodness, they keep on coming. This was on Monday, I think Monday as well. So PayPal, I've been a fan of this name for a long time. They own Venmo, which that is a big millennial name. If you want to get into something that millennials like, it's Venmo. This allows you to send money electronically. So not only do they have PayPal, which a lot of people use, but Venmo, which is a huge thing. This is in a great uptrend. I mean, it just had another crossover, MACD crossover. Stick with the trend is all I could say with this one. Again, they're buying everything with this one. They're buying weeklies. These are January calls. So they're spreading out. They think that there's apparently a lot more upside further out. Is why they would be buying January options and not just the weekly stuff. VFC, another name. Netflix. Again, it's tough to not talk about the obvious ones, but they just keep on going after Netflix calls. Again, we got earnings coming up, as I mentioned. This is one of those names that's running into earnings, right? So who knows? I have a feeling that names are going to run into earnings, and then on the earnings report, it's going to be like, kind of what we saw last quarter. Just a hunch I have that names are going to run. Names that haven't run are going to run, and then there's not going to be that much going on for earnings. So we'll see. That could be something that happens. It's just something that I have a feeling, have a hunch. Duncan, we mentioned this. I mentioned that one again, and that's pretty much it. There's one more. NTRS. Again, another. The financials are most of them are overbought. This one's not. I mean, this is not a bank. This is more of an asset manager. They do a bunch of different things, but right, this is one of those names that made a big run up and then splat on earnings and is now in this earnings gap. So what I'm looking for is I'm in this name as well, and I'm looking for this to fill the earnings gap up to about $96. I had a question. Somebody asked me, "Oh, well, maybe they just purchased this for options. They report on 10/18." My comment to that person on Twitter was, "Well, why didn't they just buy the October options then? Because the October options cover their earnings report. They bought November's, and they bought a lot of them." So all right, so that's today's. That's the end of the video. Again, my general market feeling is that we're overbought. We're ripe for a pullback. I'm looking for names that are not particularly overbought right now. I'm hedging a little bit, something that I haven't done for most of 2017. Earnings, I think that we're going to get a chop fest once we start to enter into earnings season, which is just around the corner. When does BAC report? BAC or JP Morgan is the first one, right? So it's upon us. It's a couple days away for when we start. The 12th. So this week is basically when the financials. I think that that'll be the reason why we may get chop. Again, any type of big move down, I think, is a great opportunity to kind of go over this list that I've given you, and to add some risk into some of those names that are overbought. All right, so thanks for watching today's video. Would love to see you take me up on the offer of a free trial for a couple days. Again, my email address is cfromhertz@gmail.com. Thank you. Have a great night.